talk about all of the important cues that you should watch as we get into a brand new trading session. We have our research team here with the trade setup and all of the stocks as well that are likely to be in the news today. Reema, Nigel and Surbhi are all with me now. Guys, a very good morning to all of you. Reema, coming to you first, take us through, all of the cues that we should track. We did see a bit of a pullback to end below the 19,400 mark, but take us through what we should watch this morning.
Yes, so by the close of trade, we were just a hair below the 19,400 mark, but it was still a good session considering the outlook that we had last week. So the Nifty did manage to close up in the green and inch closer to the 19,400 mark. The big cue from Wall Street, as you pointed out, is the rally in Nasdaq rallying 1.5%, and this is despite rising US interest yields. So the US 10-year yield has risen quite a bit at levels of 4.35%, levels that we've not seen in a very, very long time. But despite the strength that we saw on Nasdaq, investors are still worried about the rising treasury yields and the continued pessimism surrounding China's outlook, and that will continue to weigh on the sentiment. The focus will be on the Jerome Powell meet. For our own markets yesterday. We still are respecting those key levels. On the way down, 19,250. On the way up, it's levels closer to 19,500. These are the two markers the street is working with. In terms of flows, the DII's net bought 626 crore in the cash market. The FI sold about 1,900 crore in the cash market. And today is the Fin Nifty expiry, the weekly expiry. It's a Tuesday, so keep your eye on the banks in particular. Back to you.
All right, Reema, thanks a lot for laying out all of those cues for us. Let's also talk about the individual stocks that you should watch in today's trading session. We have Surbhi here to run us through that entire list. Hi, Surbhi.
Hi. So first one on my list is Union Bank. The board has approved a fundraise to the tune of 5,000 crores via a QIP. The issue price is set at 91 rupees per share. The bank, the QIP opens today, and Adani Enterprise will also be on our radar. The promoter has increased stake in the company by acquiring an additional 2.2% shares. SJS Enterprise sources say 30% equity is going to change hands via block deals today. The size of the block could be in the tune of 540 crores. Lemon Tree Hotels, the company signs licensing agreement for 2 properties in Bhubaneswar and Kasauli. Brigade Enterprises is also on our radar. The company enters into a sale deed to acquire 6.54 acres of land parcel in Chennai. And lastly, RITES is also on our radar. The company signs an MOU with NHPC for rail infra consultancy for its multi-purpose projects.
Okay, Surbhi, thanks a lot for running us through that entire list of stocks. We're going to watch for all of these in the session today. But finally, it's over to Nigel, who's looking at cues from the futures and options space. Hi, Nigel. How's it looking?
Well, yesterday actually looked quite good, right? You bought the intraday dip and you made some money. The Nifty ended higher, closer around the 19,400 odd mark. What stood out was there was some unwinding of positions, or, open interest was lower for the near-term contract, both on the Nifty as well as the Nifty Bank. And by the end of the day, well, we looked at the FI data, and it appears, at least on the Nifty Bank, there were some shorts that got covered out, and they added some mile long positions, though they remain net short with a short positioning at around 57% out. On the option side, well, they bought more puts than calls, but what's encouraging from my perspective is they wrote more than 1 lakh contracts, more puts in comparison to calls. So the put writing is something that will be heartening from a bullish perspective. We should get that up for you. 1.9 lakh shares is what they wrote out there. Now, 2 strikes is what we're looking at. 19,350, the put, and 19,500 call. There were some signs of writing on both these 2 strikes, which brings us to the levels. Now, in the near term, the 20 DMA, well, that remains a line in the sand. The bulls will want to get to that level and get past that level. Then you'll be saying, hey, we're in for a fresh breakout. Till then, you'll say, we're pretty much in that range. On the downside, the 50 DMA is important, but we've seen the Nifty bounce off that 19,250 odd, so that becomes the crucial support zone. Since it's the Nifty Financial Services Index expiry, I looked at the options data, and that's the broad 150-point range that you should be looking at for today's trading session. It's pat in the middle, closer to the lower end, so let's see how this goes. For starters, though, the GIFT Nifty, well, it was suggesting a bit of a flattish start, I think, so a bit of a negative start. So we'll see how this goes. But for the time being, yesterday was a good session. We'll have to see some follow-through today. Back to you.
All right, let's see if that comes through. Nigel, thanks a lot for running us through those cues. But with that, it is time for our first break on the show. When we come back, we're going to bring you details of that Union Bank QIP that we mentioned, and also excerpts from our conversation with L&T's MD and CEO on labour shortages. Stay tuned.